I do believe so. You've had quite a strong rhetoric come from many finance ministers around the Eurozone saying that they really are drawing a line in the sand when it comes to debt forgiveness. You might see some movement about maturities on how long that debt does take to get repaid back, and in fact the interest rate, you see it. But for many, particularly those in Germany, they do not want to see their taxpayers effectively footing the bill for Greece. And I think as the situation develops in Greece, as we enter that negotiation period with the Troika and the Syriza coalition party, you'll effectively find out where those boundaries are. So I think it is still going to be a very bumpy road for markets, and the volatility will increase as we find out more. They are worried about setting a precedent, I think, for other regions or other countries in the Eurozone. There's very much a strong correlation being made between what happens in Greece and what may happen in Spain. They're going to have an election at the end of the year. We're seeing the same rise in this anti-austerity party in Podemos that we saw in Syriza in Greece. And they're worried about whatever they give to Greece, they would also then have to use as a template for perhaps Spain, and if there was a need to renegotiate any agreement there. So I think they're very much worried about the foundations of the Eurozone itself and what they've agreed to do and how that might unravel should they start giving this debt forgiveness to one country. Yeah, we have seen some softness in some of the economic data that's come out over the last quarter. The numbers we got on GDP this morning weren't that far below consensus, 2.7 year on year instead of the 2.8 the market expected. Those numbers are actually very strong. That's the highest yearly growth since 2007. However, there's still, I think, a lot of worry about the balance in the economy. That was all driven by the services sector. We saw the more volatile construction. In fact, the utilities and production numbers contract a little bit. Again, some of that's due to the oil price and the output from the North Sea oil rigs. However, I will look forward to the expenditure breakdown that we see in GDP coming out next month, in that you'll probably see the same imbalance in the economy, but you'll see a very strong UK consumer. They're very much benefiting from the fall in the oil price, as many other developed countries are, and at the same time we're seeing wage growth start to pick up again, so real wages are moving into positive territory. That's very much going to help the consumer. We will see a strong boost from the consumer in the coming quarters, so I wouldn't be expecting to see those numbers pick up massively, but we might see GDP numbers start to improve a little over the coming quarters because of that power of the consumer and because they are such a large chunk of the UK economy.